Senior Research Analyst from Institutional Equities at Prabhudas, Lilladher. Shashi, TCS, they spoke to analysts yesterday. Were you listening in as well?
Yeah, I was there at the analyst meet yesterday.
So what were the key highlights you got from there?
Okay, so management, atypical of them because they have been consistently performing so well that it has become, the good performance is an usual habit for them. And they retained the earlier commentary wherein they stated FY15 is going to be better than FY14 and H1 seasonally strong is going to be better than H2. In that continuation, obviously Q2, somewhat marginally stronger than Q1. So, in terms of numbers, if I say, last quarter they did 4.8% constant currency term growth. This quarter 5%, a touch better than 5% looks in constant currency organic growth, very much doable. Including Japan, which will contribute around $100 million to the revenue. So they will have somewhere around 7.6, 7.5% in constant currency term growth at the top line.
All right, just want to quickly mention that we are currently at the day low on the Nifty. It's trading at 81.43. 81.40 is the support, but we did go down below that to about 81.32 today, and we came back. Okay, Shashi, you aren't worried about the fact that, the Mitsubishi tie-up, TCS had earlier said that they'll have a range of about $300 to $370 million in terms of revenue from the Mitsubishi tie-up for FY15. Now they're saying that it'll turn out to come in the lower end of the range. Have you worked out what that means in terms of earnings?
When you integrate any inorganic contribution, there are some accounting norms that you need to abide for, and I will show that Mitsubishi might be little different. The way they account for revenue and TCS might be little different. Some of the discrepancies might be because of that. Second, if you look at yen, that has depreciated. Mitsubishi might be having, Mitsubishi is having a good deal of revenue coming from Japanese operation. And when I say Japanese, it's local to that market. It's not, it's not Japanese companies having operation outside Japan. So that also will have some impact. However, the management has retained their full year guidance from Japan. They said that they are not calling it out at this point of time that the full year guidance will not be achieved. So we will say that we need to watch out for next quarter growth from Japan rather than passing the judgment in this quarter's performance.
All right, I'll move a little bit to Infosys. A lot of focus on the new CEO, and there are these kind of road trip, sort of road show kind of things that Infosys is doing. Also the new contract, that BP contract, 5-year contract. Have you looked at it closely?
Right. I mean, these companies already had relationship with Infosys. If you remember, 2009 April May time, Infosys signed one such contract with BP. And this new contract is an extension in the scope of the work they are doing with BP, along with renewal of...
Well, I thought Infosys has said that this is a new contract which replaces all other contracts that they have with BP. This is a completely new contract that they have. That's what the spokesperson said.
Okay. Yeah, so exactly the same thing that I am saying. What I am saying is this is extension of the old work, which means the older work has been renewed, plus some newer scope of the work has been introduced. So this is one big MSA that is signed, which include the older work and some of the newer work as well.
And what is the kind of size? The report was about $500 million. Do you have any more clarity on that?
So it is in and around that, maybe slightly bigger than that. Newer scope might be slightly smaller than that. So, older, if I am not wrong, they might be having something around 400, $500 million TCV signed in 2009. So I think there will be incremental 150 to 200 around, this is my guesswork and guess estimate, that incremental work will be around $200 million from this BP contract.
This is the largest single order that they've got since Mr. Sikka took over. Do you think that it was a good idea to have a person who's stationed out there in North America to have him as the person running the operations?
I would say, 1 month is too short a period. Mr. Sikka's capability goes beyond this. He's far more capable than attracting larger contract than what they have. Infosys has already signed with BP, and we should not jump our gun to judge him at this point of time that this is the way things are going to be, or this is the way things are not going to be. So I would say that let's wait for next 4 to 5 months. Let him come out with a bigger strategy. Let him drive the company, and then perhaps we will be in better situation to pass our verdict. But I think so far so good. Things looks to be in control. He looks to be in charge of the ship and in control of the situation. So right now, whatever he's doing, everybody is closely watching that, and things are looking out to be very perfect.
So if I look at the entire IT space, there are the big cap players who are trading at about 22 to 26 times their earning estimates. And then there are the slightly smaller ones which are looking quite cheaper. Would you be betting on some of the mid-cap counters? I mean, could you give me some names there?
Right. So in mid-cap, we continue to hold our preference for KPIT, Mindtree, Persistent, and NIIT Tech in the same order. And that has not changed. We do have I think once in a quarter we do discuss that. So that has not changed for quite some time now. I think KPIT largely driven by I think before I got into the discussion, you guys have been discussing about some of the new launches by Jaguar and some of the other cars. Automotive sector has been doing good, and KPIT is one of the strongest player in that domain, where they work with lots of OEMs on the embedded system. So obviously they would be one of the biggest beneficiary from that. Mindtree, they have been executing consistently over the last 2 years, and I don't see any signs of fumble at this point of time. So that good momentum is likely to continue. Persistent last quarter was a little bit anemic. This quarter might not be strong either, but the space they are in, we are very confident that the opportunity is huge, and we should see a strong growth from SMAC and for Persistent. NIIT Tech has signed a good order book over the last few quarters. However, because of some client-specific issue, they had weak last quarter and may not have that strong this quarter. But we are confident that in 1 or 2 quarters' time, when once that ramp down gets behind them, they should start accelerating in terms of growth.
Shashi Bhusan, thank you so much for joining us. Pleasure having you on the show today. Let's switch gears and go across to Mr. Khaitan. He is we're focusing on average